Coming up in this show, I'm going to bring you my opening comments on the markets. Avi has a trade idea for you. He's going to look at the analysis and the approach to ROKU. Katie is going to bring you trade planning with options. This is a great look at her analysis and strategic option approach to Disney. This is the final weekend to give the gift of askSlim. You can give that gift to yourself or somebody else. We'll send you back an Amazon gift card. And I'm going to bring you analysis of the stock market. I'll show you S&P analysis for the next few months, plus analysis on Apple, which is tipping off the stock market condition.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market started the year in retreat, as the favored stocks from last year led the indexes to the downside. It's not a big surprise that selling would come in early in this year, as long-side holders with big gains pushed off tax liability into 2024. Also, valuations reached nosebleed levels for the AI stocks as the indexes came up to resistance levels. There's also the Mideast conflict, which is really threatening to become a crisis and maybe an expanded war, as we see more bombing going on and attacks on the ships that are in the Red Sea, and that Iran is sending a warship into the Red Sea, and the potential for the U.S. retaliations in Yemen to the Houthis. All of that is a risk, of course. Apple, the heavyweight in the indexes, weighed heavily on the market this week, as there were multiple downgrades and slowing iPhone sales, and of course they have seen quarter after quarter of declining revenue. So it's been a bad time for Apple and probably going to get worse. There is a breakdown in those charts, and I'm going to show you that coming up. Fed minutes helped for a few minutes. Generally, they see slowing inflation, as we all do, and they see rates coming down this year. They seem to disagree on when that's going to start and how much that they're going to decline. The payrolls, they came out on Friday, and they were stronger than estimated. And the unemployment rate is still a very low, historically low, 3.7%. With that, it's pretty hard to find justification for big cuts in interest rates. I'm going to make the case that there are probably 3 cuts this year, starting in June, and it will take the economy turning down significantly for that to happen, which will, of course, coincide with the stock market moving lower. Friday, on those payroll numbers, when they came out, they immediately went down as the bond market fell. We saw those indexes go down and follow the bond market. But then there was a rebound here on Friday as some bargain hunters came in on some of these stocks after the market was down 3 straight days to start the year. And I will tell you that here with a good gain here on Friday of about 28 points on the S&P 500, I'm going to make a bet that doesn't hold, and that the markets are lower coming into the middle of the year and middle of the month. I'll show you that coming up. Our analysis did show that there was resistance in the S&P 500, and it would likely stall, and we did project that it would come down earlier in the year. Now, if you remember our analysis of a couple of weeks ago, we said once this peak is in place, we would see the S&P 500 fall between 140 and 240 points in what would be a fairly mild correction. That is underway, even though we have this bounce here on Friday, I'm going to give you that detailed analysis coming up. When the market does decline, as we expect, we think it's going to be a buying opportunity for short-term traders and position traders, and maybe for investors to still hold on for a little while longer, and I'll show you that. I think there is a test coming of the December high, and with that to prove to be correct, I think it will set up a pretty important selling opportunity. I'll also show you that coming up, and you can see really good detail and long-term projections in my special report on the major market indexes, which I think is a must-watch. And thank you for all the people that are giving me great comments on that and sending me emails. I think there is a potential big swoon coming in the first half of 24, and I'm going to show you that in that special report. Make sure you watch it. This week, right now at midday, with this rebound going on, we have the S&P 500 only down about maybe 0.5%. The Dow only down about 0.5% on the week. S&P 500 about 1.5%. NASDAQ close to 3% down. The Russell, the worst of them, because that reacts strongest to the movement in interest rates, which Russell's down over 4% on the week right now. Bond market, the 30s are down about 2 points. The TNX is bouncing now about 18 basis points on the week. It actually made a low last week of 3.78%, which I think is absurd. And it has now bounced to 4.04%. Where do I think it's going in the first few months of this year? Watch that special I put out. Gold, it's down about $17 on the week, and the silver market down about 70 cents as the dollar gets bounced and the yields bouncing are also weighing on those markets. And I think it's a very volatile market. They're chopping around like crazy, and I believe there are significant opportunities coming in those markets. Dollar up 1%. I think it's going to get up to about 103 or 104 and then move down again. And I think 100 is coming in the dollar again. And oil moves up 275. Most of that is based on the Mideast crisis going on. I think there's a little more on the upside, but without an expansion of the war, I think we'll see sub 70 again pretty soon. You want to see all of that analysis on indexes and all of the futures that we do. Watch Future Speak every Wednesday. Arvi does just an incredible job on that, and that is for level 2, 3, and 4 members. If you're brand new, get acquainted, go to askSlim.com and get a free membership. And YouTube, subscribe to our channel. It's Ask Slim Team. Click the notification bell and like this video. Give it a thumbs up. On X, follow at askSlim. And any questions you have about what we're presenting, please write to Matt at askSlim.com. Also, I mentioned that special report on the major markets for 2024 and beyond. That was released this week. I'm going to give you a very big picture, long-term views on interest rates, the dollar, metals, oil, and the stock market, as I do projections in both time and price. You can watch this. All you have to do is sign up as a free member or a Snapshot Lite member right on the front page of the askSlim.com website, and then you will be able to watch this special report. So I hope that you do that. Please send me your comments on it. Trade ideas. Arvi is going to share his analysis on ROKU, which is negative. Take it away, Arvi.
Hello, this is Arvi Ramachandran. In this video, what we're going to do is walk through an intermediate term short in ROKU. Now, this is the weekly cycle analysis that we have for ROKU. First thing I want to highlight is this really clear double top that formed off of this just meteoric run on the upside. You can see these two equal highs. And then what happened is we formed a low right here that was very close to that old low, had a very weak rally, and then formed a nasty left-hand translation here where the high formed early in that cycle. And as you can see, we sold off for the rest of that cycle. Ever since that point. We have just been mired in this trading range. However, inside of this range, there obviously have been some solid opportunities. So let's go ahead and zoom in a little bit here. And I want to highlight one that we are seeing right now in Roku. Now, first thing you will note is that we did form our low basically right on time here, as we had a low that was due 925 to 1023. We then turned up sharply, and you can see we have now seen some failures right here around this 101 half area and are now curling back on the downside there as well on our weekly reversal scout. And what that says now is that we are very likely in this intermediate term corrective period with a low that is only due 219 to 41. On the downside, we are looking for a move towards 75.79 to 66.88 into that key weekly cycle timing window. If we shift over to the daily time frame, you will see what's happening here on the short term. So there have been actually fairly clear longer cycles here in Roku, and what this looks like at this point is also a short term now left-hand translation, where we just had a 1-bar rally and are pulling back. And you will see right now we have a bearishly configured both slim ribbon and daily reversal scout as well. So the core bias on the short term is now firmly pointed down. So what are we looking for? We are looking for a bear flag to form, and then for this to turn back down into this low, which is due 126.227. On the upside, you can see our levels right here. It's at 94.55 to 97.28. That's where we are watching for this to fail in. If this closes above 100 on a daily basis, that would render this idea no longer valid, and we're looking for a move down into this 50 to the 61.8 fib, which is this darker green area, and that's 81.93 to 75.58. The risk on this idea is right around 540, and we are looking for a move of at least 1250 or so on the downside. So this is what we do for every one of our trade ideas. We walk through our logic in a video so you can see why we have the levels we do and what we are looking for in terms of the price action moving forward.
Fantastic work on that. This is trade planning with options. Katie does a phenomenal job as she is truly an expert in option trading, and specifically she does this fantastic work on the Tasty Trade platform. She's going to show you in this video how to open an account through our website, which helps us if you do that. So please do consider going to the top of our website to the Marketing Partners tab and take a peek there. She's going to design two different approaches, two different option strategies to trading a Disney, and this is negative.
Hi, this is Katie with askSlim. This is Trade Planning with Options on January 4th, 2024. Today we're going to look at an options trade idea in Disney. First, we have our legal disclaimer. The options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, or managing them, I'm simply educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow these trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the askSlim website or email matt@askslim.com. Let's get started. This opportunity in Disney was identified by looking at the cycle low timing tracker. This is updated every day, and I want to call your attention to this box here in the lower right corner. This box is titled In Sync, and what that means is that the current daily cycle of these symbols is due to form a low in the time period when we are also expecting a low on the weekly chart. So we would expect these symbols to show some weakness, possibly even breakdowns in their current daily cycles, and Disney is such a symbol. Now let's go and take a look at the chart. This is the weekly chart of Disney. We are heading into the declining phase of this cycle with a weekly cycle timing window that's expected from February 12th to March 22nd. Now, notice the reversal scout, that's our proprietary momentum indicator. It has turned purple, showing negative momentum now. Now, in the past, if you look at these cycles, that has been an indicator that we have seen the high of the cycle. Let's now switch over to the daily chart. So here's the current daily cycle right here that we are in. It is a 48-bar cycle. Now, the prior cycle formed a low here, having tagged the top of that support zone. Then we got this move up to the 78.6% fib and stalled there. Notice that the reversal scout never did return to positive momentum after this retracement, although the slim ribbon did briefly turn green, then it neutralized, and now we are back to negative momentum on there. Disney has begun to show the expected weakness, and the slim ribbon and reversal scout are negative. So this cycle low support here is being threatened, and we have put in the supports from the weekly chart over here. The daily cycle timing window is between February 15th and February 26th. Remember that the weekly cycle timing window is expected from February 12th to March 22nd. So this daily cycle trough syncs up with the weekly cycle trough, and that's the reason that Disney is in the in sync box on the cycle low timing tracker. We are going over to the tastytrade platform, but first go to the askSlim homepage, hover over the Marketing Partners tab, and click on tastytrade. That will take you to this page where you can learn more about tastytrade. They are our preferred options trading platform. If you'd like to open an account with them through our link, that will garner you a special bonus, and it also helps us, so please do check this out. Okay, here is the tastytrade platform. I have Disney loaded in here so that we can see what kind of implied volatility situation we have. That lets us decide whether to look at a long premium or short premium trade idea. Now, Disney has an IV rank currently of 26.1 with implied volatilities in the mid-20s over in these expiration cycles. So that's kind of middle of the road. So let's look at both types of trade ideas. I'm going to use the February 2nd expiration cycle to avoid earnings on February 7th, shown on tastytrade in this purple ribbon. So starting with short premium, the high of the cycle was at 94.83, and with a cycle that's in sync as well as negative momentum in both the weekly and daily timeframes, the probabilities favor Disney not being able to take out that high. So let's sell the 94 call. This nets us $1.11 in credit, and we're going to use a little bit of that to define our risk and cut our capital requirement a little bit. I'm going to demonstrate a $10 wide spread, so I'll buy the 104 call. That allows us to still collect $1, so max profit here is 102. That is our credit collected, and our max loss is the difference between the width of the spread and the credit collected, so in this case $8.98. That is also our capital requirement to place this trade. Probability of profit is 75%. We pick up 25 short deltas and a daily theta of $2.63. Here is your risk graph. We need Disney to stay below our short strike at 94, or at least below our break-even point at 95.02. Now let's go and set up a long premium strategy. I'm going to demonstrate a put debit spread, and I like to start right around the 7D delta. So let's go and buy the 93 put. And now let's sell an out-of-the-money put to reduce our cost basis. Let's try that 88 put. We want to be close to a 1-to-1 profit-loss ratio, and that is very close. So this is a $5 wide spread. Our max loss is going to be the debit that we paid, $248. Let's quickly lock that in, $248. And our max profit is right here. It's the difference between the width of the spread and the debit paid. That 248 is also going to be your capital requirement. Probability of profit, 50%. We pick up 34.5 short deltas and a daily theta of just over 31 cents. And here's our risk graph at that one. You can see that this is the current stock price right here, that little flag, and we need Disney to move lower. So I will update the options trade idea tracker with these trade ideas, and we'll follow up on these as well as that AMD straddle next week. Feel free to reach out on Discord or via email to katie@askSlim.com if you have questions or feedback.
Great work on that, Katie. Stock market analysis and projections on the S&P 500. Important information. First, please do read this slide. It tells you about our approach to analysis and about how it's best for you to use our work. Always want to just talk about trade ownership, how important that is for you to own your own trades. This is the final weekend of Give the Gift of askSlim. And for this new year, we're basically extending it out through this weekend. You can just learn so much about how we approach the markets by taking advantage of the best prices that we have absolutely all year long. Just go to our front page of the website, see up there, click here, just click that Learn More button. Give the gift of askSlim to someone who loves trading or technical analysis. Give the gift of askSlim to yourself. This is great for upgrades. And we'll send you back a gift card, an Amazon gift card, so you get part of that money back. And these are non-recurring memberships, which means that sign up, give the gift to somebody, and you don't have to worry about it renewing. Or if you do that for yourself to try us out, you don't have to worry about it reoccurring. So that's it. If you love it, which we expect that you will, then you'll just let us know that you want to stay on. We'll contact you about that. But non-recurring memberships, give the gift of askSlim. Last 3 days right now. It's going to end here on Sunday. Stock market analysis, S&P 500, weekly and daily analysis. Plus, I'm going to show you our market condition monitor, and I'm going to show you Apple, which is giving a negative warning on the market. So I think this is really important analysis for you to see. So let's start out by looking at the S&P 500. This is our side-by-side view. On the left side, we have the 10-year weekly we're looking at here. We're looking at a 2-year daily over here. And if somebody is looking at this for the first time, this is cycle analysis. These brackets on the bottom that you see, these half moons, are a drawing tool. They help us understand the rhythm or the heartbeat in the market. This is essentially money flow. This is not any kind of hocus pocus. There are cycles everywhere in nature, and if you go to the askSlim.com, to the top of the website front page and click on workshops, there's a free video in the cycle analysis workshop, and you can learn more about it there. For those of you that are Elliott waivers, and I'm not, you got to be looking at this and saying, holy cow, does that ever look like a perfect Elliott wave pattern? That's about all I know about Elliott wave. I'm a cycle analyst, so I don't really look at Elliott wave, but this is a good look at a uptrend that is very clear, with the bear market right over here ending right back over here, and then this rally that we've seen for a good close to a year and a half on the upside. Now you could see these cycle rhythms in here. There's a dominant cycle and there is a half cycle. You can see the perfect half cycles right in here. Now these don't always exactly align. These are average lengths on the cycles. This is the ideal and this is the actual that you see here. So if you see that this is the ideal cycles right in here, and if I had upward energy pushing to the upside right in here and tilting that to the upside, it would look exactly like you see right over here. upward energy, higher peak, higher bottom, higher peak, higher bottom, higher peak. That's why this was not a surprise. Also, you could see our reversal scout right over here. This is a level 4 study, and this really helps us understand the cycle conditions. And you can see we still have upward momentum, as you see right there, and then this downturn here at the end of the year. These were the fib extensions that you see there. That's these blue areas right over here, 78.6, 100% fib extension that is built off of this cycle right there. 10.9% decline, pretty normal correction in a bull market right over here. And you can see that these yellow zones are where these nesting areas, in other words, the shorter term traders start selling right in here, the intermediate holders start selling right over here. It brings a lot of money flowing out of markets during those periods, as you see right there. And the next one out over here comes out in April, May. Please do watch our special report on the major markets, and I give you a detailed look on the monthly charts on how this all lays out for this year and coming years. So you can see in here that there is a low due sometime right over here in the middle part of January. And this is just a little minor cycle pullback right in here. The daily cycle trough is right around mid-January. I'll show that to you as I move forward right here from this weekly chart to this daily chart. So again, these are the daily cycles that we have in there, and you can see how they line up. Also, this is a different cycle length than you saw on the weekly, but just absolute perfection when you look at that. And that calls for this selling wave that we're looking for. We thought it would be between 140 and 240 points on the downside. This dominant 23.6% right over there aligns with the minor 61.8%. That's that little one right there. Let's take a little closer look for you right so you can see that. And that comes down right over here to 46.30. Let's say the peak right over here was 47.80, so that would be 150 points to the downside there, with an outside chance of it getting down over here. That's 45.36. So I'm going to say the highest probability is the center arrow that you can see right over there, and that's why we put that in there, because that's the highest probability. So it's really made up of two channels, an upper channel and a lower channel. It kind of makes up something that we call the slim cloud, which we'll be working on as a study in the future. And this, you could see the momentum is the slim ribbon right in here. The slim ribbon is a great momentum tool, and on the bottom is the slim ribbon PO. And what this tells you is when there is likely momentum resumptions in a specific direction. And look at these beautiful things right in here, as they were telling you, likely to try to get back up. You could see that right over here. That means that you're probably going to get a little bit of an uptick right here, but still, this is a bit early for this cycle to bottom. So we're still thinking it comes down over here, falls down to about 46.30, and then gets this next rally and probably tests these highs over here out sometime in the early to mid-February period. Then we get into that next period of risk. I'm coming back to the weekly, which then would bring you down after this rally into this bigger period of risk. So this is a rally here in February, maybe out into late February, early March, and then we get into that bigger period of risk over there, looking at the weekly chart. So I'm going to go back to the daily, back and forth, and you can see this probably does not hold the rally that we have today, with the S&Ps up about 30 points right now. Just buying coming in after this decline that we had in here of about 120 points on the S&P 500. This does seem early to me and very likely to give way for about another week to the downside. See these two light blue lines right over there? That is the ideal time frame for the low to occur, or the cycle trough. So that comes out somewhere around mid-January. We'll look for a little bit more on the downside. There's your side-by-side look, as you can see right there. And please do learn more about cycle analysis again at our front page. Go to that workshop tab and watch the video in there. You can see what's in our workshop. There are 24 video modules. Took me 2 years to write that and over 6 months to produce. You will learn a ton if you decide to invest in that workshop. So I want to now switch over to something else because we looked at the S&P 500. I'm not going to look at the other indexes. And if you watch the Future Speak show on Wednesday, you'll be able to see all of the indexes and a total of 24 different indexes and futures contracts that we do analysis on. But right now, what I want you to see is the market condition monitor. So this is available for level 3 and level 4 members. And right now, this is set up on intermediate. I want you to see right there. Essentially, you can be in the trader version. So it's what are you, an intermediate, short term, near term, which is a couple day swing trader, or an intraday trader. Intraday is only available for level 4. This is important. You can see in here that the intermediate conditions are still quite positive. Bullish, bullish, bullish. You can see that as these different time frames align in a positive way. You could see that on January 4th, see the downward arrows. They came down from very bullish to bullish. So the intermediate conditions are still good. And this is part of why I believe that once we get this low in the next week or so, in mid-January, then the market's going to go up and test those highs. If you were a short-term trader and then you're just trading here on a daily basis, you can see that what happened was that this turned to slightly bearish. And it says to you that the bounce that we're getting right now in the stock market is not likely to hold. You notice the diamonds are neutral. So this is telling you that the Dow is the strongest index when you look at that. And then it tells you that these other SPY, QQQ, IWM are more negative when you look at that. If you were just a swing trader over a couple days, you'd use the near term. And these right now are giving you neutral readings because the market is bouncing right now. So there's really nothing right in there. And if you're a little intraday trader right there, the intraday traders, you can see, turn bullish here, but the Dow not getting enough of a bounce. So that is still neutral. So this is fantastic. I'm going to go back to the intermediate right over here. And you can, we have a lot of symbols in here, all of the widely helds that you use, so you can scroll as to what are the most positive, most negative as far as conditions go. You can see in here the top 4 bearish ones I'm going to show you: Starbucks, corn, soybeans. So we have negative conditions going on in those grains that are falling very hard right there, and just the top 4 here that we're looking at: KIE, EWC, XLV. And Goldman Sachs is the only stock showing up there. And you could scroll down and see which of these stocks are still bullish in here, very bullish, all that great information. Or right over here, again, I'm looking only at intermediate right now. So, and the very bearish ones right in here. So this is an unbelievable application, really. It's got all of our algorithms built in there. And for level 3 and level 4, it's just great. So if you take advantage of our last weekend here, Forgive the Gift, then you will be able to get this app to have and use, and I think you'd really like that. So that's a look at the stock market conditions. I said to you that I also wanted to look at Apple, which I'm going to do because I think it's giving negative warnings, and I give a nice cycle analysis lesson here when I move from the S&P 500 to AAPL. So here are the Apple charts. Again, we're on side by side right over here, looking at weekly and looking at daily. Let's look at the weekly first. So what I want to show you, and for RV, who keeps these charts up as far as the equities go, and also Katie. Also, you'll note that I also put in a half cycle in there because I wanted to illustrate that for this purpose. For our members, you don't have the half cycle, but you can see right over here where that half cycle lines up, or here. So it's a half cycle. They're showing up so you have the dominant and the half. This one didn't have any significant dip in there. It was swamped by the upside pressure. So this minor cycle, as they say, went invisible. Little dips right in here is all it could get. And let's see the dominant cycle low here. You could see where the reversal scalp turned up and warned. And I want you to note that I have these little red warning circles right over here. I put specifically on this chart, because I wanted you to see where the reversal scalp comes down and warns on the weekly chart that the cycle peak is in place. You can see that right over here. The cycle peak in Apple is in place. There have been downgrades this week. Their revenues have been falling. Their sales are on iPhones are under suspicion. And you can see that this decline right in here is coming right in this minor cycle period right there. So, like I said, the stock market is likely to fall for maybe another week, then have another move toward the upside. Here's that half cycle in Apple that you can see. And what we're projecting right up over here, this is likely a selling opportunity coming up when you see there in that rally. Now, what makes me so negative, other than the fact that momentum on an intermediate term has turned down right over there? That is the daily chart. This is just very important to look at. We're going to look at these periods right in here. And that is, you can see that there was a downtrend in here as I go back to July of 23. And note where this cycle bottomed right over there and how it gapped down through that bottom. That warns that you're in a negative cycle condition, and it is likely to keep falling right through the cycle trough. You can see that. Then the next rally is likely to fail in resistance below this high and then move down again. And that made a lower low, and this one made a lower low. You can see that. This one was so weak that it actually ran long, and this rally in here failed right in the resistance and made another lower low. So you see the gap down and the breakdown right over there, and the slim ribbon turning negative. Look what happened right over here. The gap down, the breakdown. This is exactly what happened right over there. And we are in this declining phase. Now you could see the ideal low comes here in mid-January. That's exactly what we're looking at on the S&P 500, right? And Apple has been leading the way on the downside right now. Also note the slim ribbon PO has turned red as the slim ribbon has had that negative crossover. Look how when it was bullish in here and this was signaling upside resumptions, right there, see where it was negative here and signaled the downside resumption right there? All of that, very valuable. This is a period of risk for Apple right over here. It actually is not really placed correctly. Let's just put it right in there because there's probably a bottom coming in here and then a rebound. Remember, we said the stock market would rebound also into February, maybe March. And this is the sell pending area. Once we get where the low is in here, we'll be able to put the resistances. And you get this rally over here into late January into maybe early February. What's the probability of this moving down again below whatever low it makes here? It's extremely high. You see what happened, the big rally, then take out the low? This is a very good shorting opportunity coming up right there. And this is how we use cycle analysis. So you can see this decline right over here, set up these resistances right in here. It got up a little through that resistance that was right there at the 61.8 to 78.6 and then broke down. So you had this little resistance here, never made it through. The slim ribbon provides resistance. The slim ribbon provides support. And if it gets some bounces in here, the slim ribbon is probably going to provide resistance again. It's in some support area right now. This support right over here is 178.5. Probably gets down over there in the next week, tries to rally here into the close to 190 area. That's a pretty good move, right? And then that's the sell and then down. And this probably aligns with that next leg down in the stock market. There is your weekly pattern right over here, and the likelihood of that setup of the second minor cycle and the big decline. Apple looks like it's going to end up after making this sell right over there, coming down here and breaking below 73, potentially getting down to 165. So below 173, potentially getting down to 165. When is that? It's out in May. If you watch my big picture analysis on the stock market. In the special report, we talk about the importance of the May timeframe. This is really an amazing alignment. Apple is in trouble. Rallies are for selling. I hope that is really valuable to you. You can see how that aligns with the stock market. You can see how that gives you information on the stock market because Apple is the heavyweight in the indexes. And this, I think, is important to you, important to your trading, and important to your investing. I want you to be so unbelievably successful, of course, because your success is our success. That's it for this show. Please do go to askSlim.com, get acquainted, sign up for the SIR Lite, that's the Snapshot Lite, or become a free member. You'll be able to watch our special report on the big pictures of the major markets. YouTube, subscribe to our channel, click that notification bell, and give us a thumbs up. Watch the member videos in the playlists on YouTube. On X, follow us at askSlim, and any questions that you have, write to Matt at askSlim.com. That's it for this show. I want you to be so incredibly careful. It is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to the city.